January 17th, 2023. This is the 2000 tick chart on the Emini of the ThinkorSwim platform PaperTrader. This is what the chart looked like today. There wasn't very much volume. This is the chart that I had marked up as it went out throughout the day. I took a total of 4 trades, 3 winners and 1 loser. I'd like to point out something on the bigger time frame. If you look on the 2000 tick chart, you can tell the volume itself is already pretty low because this was last Thursday. And look at the size of this arrow. And then this is Friday. You could tell you already chopped off maybe about a fifth of that arrow. This is Martin Luther King Jr. Day. There's a little bit of trading on the futures, but not much. Markets closed early. And then this is today. Again, you could tell you probably had about a quarter less volume than you had on Thursday. Now, if this is on time-based charts like 1 minute, 5 minute, 30 minute, this total trading range in the regular market hours would all be the same. But that's the difference between the tick chart and time-based chart. So I'm going to go into my chart and go through my trades and what I saw today. Hopefully I learned something. Hopefully you guys might learn something. So this is it. This is it all marked up. Let's go ahead and zoom in. This is the pre-market. I had this trend line kind of already drawn and established just based off of the pre-market. And then I had this trading range right here and up here. Actually, this was actually much lower at the time, closer to here. But then as the day progressed, I moved it up to here. So when the market opened, I saw this ascending trend line right here, makes a new high. There is a first entry long, then a second entry long. I don't like taking an entry here because it's coming right into the EMA. It's a reasonable signal bar, but since it's below the EMA, I didn't trust it. At the time, I did draw this descending trend channel, which cuts through. So even though there might have been enough room, you don't know if you take an entry here, would it have been stopped by the EMA. I did see a second entry short right here. So you go up, comes down. This is the first entry short. Then it makes a second entry short. I didn't take this entry either. Perhaps if this had actually went up and touched this line, it would have felt a little more confident. Plus, this is a bullish bar. It closed green, even though it is a bearish bull bar because it closed on the lower end. It went down. So I skipped that trade, made a new low. It comes up, makes a first entry short. Then it comes up to here, makes a second entry short. So this is actually a reasonably okay signal bar, but it is going counter trend because at the time, you have to remember the market is ascending. So it's going counter trend, and I don't like to take that trade, especially when it's right here with the EMA. You do have enough room to scalp out, but that's not something I'm looking for, so I didn't take this trade. However, this is a new high, made a first entry long, then made a second entry long. Now this is with trend. Also made a first entry short, second entry short. It failed, going short. And so I went ahead and took a trade right here, and I was pretty okay with this particular trade. I took it right 1 tick above. So 40.18, which is about right here, 25, 1 tick above this guy. And then I was able to write it up for my core and then take my runner here. Moving on, it comes back down and it kind of chops a little bit. It's playing around the EMA. The EMA is kind of holding, but it does break through a couple times. Then it kind of goes up. At this swing, I drew this trend line. I felt more confident because it had a couple touches here, another touch, and I extended the top of the trading channel up to here, and it made another touch. So at this point, when I was looking at it here, I was pretty confident I had probably the correct view of what was going on. So it goes up, makes a new high, comes down, and makes a low. So this is actually a second entry long right here. This signal bar isn't that great. That's why I marked it as a second entry long aggressive. Comes up. This could be considered a new high again. And it makes a first entry long, second entry long. Again, this is second entry long. If you took an entry, you'd probably have to take it right here. But I didn't like the fact that it closed below the EMA. You could claim that it is a double bottom here, and that is true. But on this bigger trading range here, it is getting close to the top. So I wasn't sure if it makes it to the top, it'll come back down, or it might just hit the EMA and come back down. So I left that trade alone. It goes up, and you'll notice it comes up here, first entry short, second entry short. This is a reasonably good signal bar. It is touching the top of this trading range, but it is going counter trend to the bigger move. So you do have enough room to scalp out to the EMA, but it wasn't something I would feel comfortable taking. However, after the second entry short aggressive against the counter trend, it comes up 3 candles later, touches the top of this trading channel, and it goes back down, makes a lower high. This one would have been maybe worth an entry, but I don't know I would have taken it here, because if you take it here, you're going to be concerned you're going to run into the EMA. But when it broke below and closed, then I probably would have taken the entry below this guy by 1 tick, because you do have enough room down to the lower part of the trading range. So I probably would have entered right here around 40, 30, 25, and you would have had enough time to get scalped out. I missed that trade. I looked at it, hesitated, wasn't sure what I was seeing, and in the end, that's okay. Better to pass up a trade than just taking one haphazardly. So it continued down. I didn't see any good setups. I did draw this trading channel going down after I was able to get this and this. Early on, I did have it a little bit more steeper, but then I noticed it broke and overshot here, so I kind of redrew it. Liked it there better. Broke out, came back in, made another low. Here, made a first entry short, followed by second entry short. Now, the second entry short, it would be going with the trend, but I didn't like how this overshoot happened, so I was wondering if it would continue up or would continue back down. So I wasn't ready to take an entry because it could have a magnet effect of the EMA pulling it back to here. I left that trade alone. Then the chart continues to move. I didn't have this guy drawn yet because I wasn't sure what I was looking at, but as soon as this guy was hit, I drew this, and then I drew the bottom part of the channel. This is second entry short. We're in first entry short, second entry short. There's also a failed second entry long. So if you count this as a new high, this first entry long, as soon as it broke above this, second entry long here. I didn't like this second entry long because it's close to the EMA, but it's a failed second entry long because it touched the EMA and came back down. But you look at this candle here, it's doji. You don't really know which way it's going to go, so I left it alone. However, like previously, 3 more candles later, you get a lower high. This is a pretty good entry because it's a lower high and it closed right at the bottom. This is worth taking. I didn't take it because I wasn't paying attention at the time. I think I was a little bit away from my desk, came back and saw it. But this would have been worth taking because your stop would have been up here and you could trust that the EMA might hold because it's held before, as well as this trend line has now been established. So it would have been a pretty decent trade to go down. It goes down, it touches the bottom of this trading range and chops sideways. I didn't see any good trade here. It breaks out. You could maybe think it's going to be a failed breakout, but it would be going against the overall trend because at this point, the market went up and when it came back down, it's testing the lows. So for me, I just didn't see a good entry or a good viable place to take it. As soon as it came up here, pulled back, went up again, I drew this to check if there was a measured move. It does make a measured move from here and here, and it didn't quite make it to the very top, but it was just good to see and good to know. I drew this swing. After this swing, I drew this ascending trend line as well as this top of the channel, but I didn't see any good entries. There's no real second entries here. It broke down below, made a new low, came back up. At this point, you see the EMA is kind of this roller coaster where it's kind of dancing above and below. It's respecting it on the upside, but it also respects it on the downside. So it just confirms that you do have a trading range day. So you don't have a trend day. You have to be a little more careful on how you take trades. EMA will come into play, but in a trading range day, EMA doesn't matter as much. It does come into effect, but on a trending day, you for sure would take entries right off the EMA. So anyways, it made a new low. It made a first entry short, comes down, makes a second entry short. I figured this one was kind of aggressive. At the time, I didn't have this trading range drawn. So all I just saw was this going up. And I also didn't have this guy drawn yet either. So I just saw a second entry short. It looked aggressive. You could make it back down to the EMA, but I didn't know if it would bounce. And it does. It makes a failed second entry short. This one is actually a pretty decent candle. This is where I actually got in early. I took this entry because when it came down to here, I thought it was going to break down further. So I actually took an entry right here, 1 tick below. and this is the trade that I got burned on. So I took on this candle one entry below at 40.12.50. There's actually low of 40.12.75, so I took it one tick below because I thought this would actually go back down. I was wrong. It turns out to be a failed second entry short. This is a pretty decent candle to take going long, and I got stopped out. Goes up. Here, I started suspecting I might have a trading range, so I kind of drew this preliminarily, and I also drew this, and then I played with it and finally settled on this by the time this candle formed, as well as I had these 2, 3 swings, and I drew this ascending. So I had this competing narrative of this trading range and this trading channel. So I didn't know which one's going to win out. Is it going to stay in here? Is it going to break up? Turns out you have a new high, first entry long, and then a second entry long. I took this trade. I like this trade, mainly because it's in the middle of the trading channel, trading range for sure, but it already confirmed with this guy. And when this guy closed, I liked it. So on this subsequent candle, I took it one entry above at 14.75, which is right here. And it closed right where it also opened, and then it went up, and I was able to get my scalp, and then my runner got stopped out because I'm okay with that because I didn't know if this trading range was still in play. So I was able to get my scalp and my runner. That was the third trade. Moves up. It kind of bounces between this trading range again. Here's the ascending. It respects it here. This line is being respected by 1, 2, 3 touches. I'm grouping these as one touch, and then this is one touch, and this is one touch. Comes up, it's in the trading range. Again, I don't know what the narrative is. Is it going to break out below, break out above? But we do have this guy. So it trades around. I don't like any real setups here. You could claim that this is a new low, first entry short, followed by second entry short. But look at this signal candle. It's not that great. And then this one would have been worth a attempt. This one might have been worth a try, take a short, because you do have room back down to this trading range. But the EMA is getting pretty close. So once it closed below, I didn't feel like taking a trade here because I didn't know if it bounced back up. But this is a pretty decent candle as well, and it would have worked out pretty well. So it goes down, it bounces around, and you have a second entry long as well as a failed second entry short because I count this as a new high, first entry long, and then second entry long. But I don't like that the EMA is right here. So if I took a long here, it's also in this trading range. And if it breaks out, breaking out of the trading range tends to fail. It will go back in. So I was not confident taking a trade here, even though I had another confirmation of failed second entry short because the first entry short and the second entry short, and it fails. But again, I don't know if this is going to dominate. Remember, this is trading range day. It's not trending. And so I left it alone. It turned out it would have worked. And then it goes back down. And this is a pretty interesting trade right here because as this is forming, I drew this when this guy formed. And I know I need a third confirmation, but I also drew this guy right about here, and I got my second confirmation, 2 confirmations in the top, 2 confirmations in the bottom, and finally a third confirmation on the bottom. So I felt, okay, at least I know where the bottom line is. And this is a very interesting trade right here because I saw a double trap, or at least what I perceive to be a double trap. Because what happens is this is oscillating, and then it makes a new low. It makes a first entry short, then it makes a second entry short. But this second entry short is only one tick below. So people who got in early, one tick below, would have entered short right here. And this is the first trap because when it went short, then it failed. Your stop for the short was probably up here. And what happens is when it goes up, either you got stopped out, and if you didn't get stopped out, you would have got stopped out here for sure. That's the first trap. The second trap is if you decided it was a failed second entry short. So it's a first entry short, second entry short. If you didn't jump in short, you probably saw this reverse and you said, oh, obviously we're going long. I'm going to take it maybe above the EMA. So you might have taken it one tick right here. You would have went long here. So if you took it long here, that's where the second trap is because it went up and then immediately reversed back down. At this candle, you're pretty nervous if you're long because if you're a short, you're already taken out because your short would have had a stop right here and you would have been taken out on this candle. If you're long, you probably took it either here above this candle by one tick or above this high by one tick. And it's going in your direction, but suddenly it goes back down, and now it's quadruple touching. 1, 2, 3, 4. And that's where I liked it because I noticed the trend is going down. So I thought there's a second trap. It's going to trap the longs, even though it just had trapped the shorts. So I put an entry here at 40.12, which is right here, pretty much where it was touching this guy. I figured this this low is probably where a bunch of longs have their stops. So I just had my short entry here waiting because I figured if it hit, a lot of longs that went early here would have to cover and I'd flush down, and it happened for me. So I went ahead, took the entry here, flushed down, got my core. I trailed my runner down, and I remember I have this established already, so I didn't want to be too ambitious. I just trailed my runner down after the high of each subsequent tick. And I went a little early because the high here is actually 47.20, so 47.50, 47.40, 07.75. But I actually saw it bouncing down. I just kind of dragged it a little bit lower. I think it was actually forming below this exit, and at the end it went up. So I was able to get my runner here as well. So that's pretty much how I saw the charts today. Hopefully this helps anybody that's watching. Thanks.